Hey everybody, Brian here from quantlabs.net. So today I'm going to show you, this is my third iteration of a system and a script that does this. But what I'm going to show you is, I've shown this video before, actually it was posted yesterday, on how my system is able to basically pick off all the best looking stocks or pairs along the short based upon market sectors. So this is the entire file. Okay, so you can see here what we've got is, just to bring everybody up to speed, is we've got the symbol name, we've got the country where it comes from, or the category. That's the category number. That's not really used. This one is the beta. This one's the EPS. Okay, and I've talked about all these in the past. I'm not going to talk about these metrics, but this is the raw file. Okay, and I'm going to show you how many stocks we've got in this that met, they do report a beta and they also do report a EPS, or maybe they don't, but at least they have an a beta. Now, out of that comes out of 11,000, 12,000 stocks that are listed and tracked through Yahoo. Okay, so with that in mind, we whittle it down to even further to maybe 4,000. So that's what we're doing, is we're trashing all of the companies that don't have or report a beta, or that don't report their EPS. Very critical to whittle out the best players, because the ones that report data or have data to show, meaning guidance with the EPS, that means they have confidence in their outlook, which is really important for you as an investor to put money on. Okay, so what we've done is I have a script that runs that, and then here is, are you ready for the big surprise? This is awesome. So what I've done is I've essentially broken up basically all the pairs and get picked out along and short in the appropriate categories. Okay, so this data will be distributed in my new analytics service. So for instance, if I look at railroads, now you'll notice that these are CSVs. You can see here we've got the symbol, the category, the beta, the EPS, and I'm still working on the market cap. Now I need to highlight here, this data is from IQFeed. You could probably get this from Yahoo, but where the problem is, if you were to try to replicate this yourself, if you're using Yahoo and you're working with over 4,000 requests to filter out what are your best pairs for the long and short, as you see here for railroad, I can guarantee you within 3 hours Yahoo will disconnect and refuse your connections and requests from your system. So you can't do that through a free source like Yahoo. That's why I'm using IQFeed, and this only would work on a paid service like IQFeed. So I can do that all day, all night, making as many requests as I want, because, well, it's commercial and you're paying for it. So that's what basically this little script generates. Okay, so let's look at fabrication, metal fabrication. Again, we have here this is the short, the very first one. This is the long. Now, as I said, this is my third iteration of it, and this is deadly accurately, because I'm going to show you probably 10 different tests to show you roughly how these are really good in terms of opportunity for arbitrage or pair trading. So let's try this one for now. So this is, again, the very first one is a short, and this one's a long. Some may work out, some won't, but I'm going to have, my system's going to have another set of filtering process to make sure that whatever positions get put on, that they actually are, they will work. So we're just generating data here as a way to experiment, and it's kind of like an idea generation process where you're adding in all these pairs to a list or a watch list, and then have another process to filter out those pairs to see what's good and what's not, and have another set of metrics or indicators that you'd use before it puts on a position. And you're only going to give that opportunity of maybe a month, 2 months, 3 months for those positions or their pairs to play out as a market opportunity. If not, they drop off the list. Okay, so let's check out this pair. Now here we are in Yahoo Finance. So let's check out the first one, the SIF. Um, Again, I don't know about these companies. I'm just using two indicators. You know, it's the power of automation. So we want we want our chart, no, summary, and then we want interactive chart. Okay, so here is our chart. So that's a 1 year process. I think that's good enough. So now what we're going to do is we're going to add our new pair, our long here. So in blue, that's the short. So in green, when you see it, that will be the long. So now we're putting in GHM to compare. So you can see here the long, which is in green, seems to be outperforming, even though we are in up market and right now the markets are hitting record highs. You can still see that there is some outperformance here. So let's say back here in December of last year, exactly almost a year ago, if you were to put this trade on here and just trade this pair, this would be probably the max time to get out. Okay, so this was all year a pretty good trade, but what you want to do is you want to maximize your spread between the two, and that's around here. So that took, let's say, 9 months to play out for maximum opportunity. And you can see here the percent moves are like 47, and yeah, I don't know. I'm not going to do the math, but I just want to show you that this is a decent pair. All right, so let's take another random look at some ones. I don't know. I know building, like when I looked last week when I showed you the reports, the best one that played out or that showed strongest potential as a sector, which these are you're looking at, was anything residential. So home improvement stores, that would be a good one because people are putting money into their stores or into their homes. Let's see what happens. Okay, so what's our pair? So we have lows and lows. Okay, so that can happen. Remember, this is the first cut of this program, so obviously this is not going to work out, this particular pair, because it's the same stock. Let's see what else we got. I know there's let's see, there's some other home health care. Let's try home furnishing stores. Okay. So here we have, again, same thing. You know why that is? You know why that's playing out the way they get picked out? Is because here's the problem with any country. I can do this with any country as long as I have the data, and the data that's really important here are these two, the beta and the EPS, and eventually the market cap. Now, again, the beta is for past and where that stock is performing against the benchmark of, I'm going to assume the S&P 500. The EPS is obviously outlook from the company for guidance, and then here is the market cap. The reason I use market cap is because I don't want to put potential positions on companies that are small, like a penny stock. So my requirement would be, I don't know, $1 billion, half a billion, maybe half a billion or a quarter of a billion, and you want liquid companies. So if you had to get out, you get out fast. They're liquid enough where you can get out of that position. All right, so let's choose a better. Oh, and the other reason why you're seeing the same stock as a short and a low and a long is, as I said, there's not enough data as a selection for that particular category. There are some sectors that only have maybe 5 companies in them, so they're no use. And then you get other sectors that could have 100, 200, 300. So that selection is pretty good. Whereas if the selection from that sector is really small, like 5 or 10, you're not going to get a good long and short out of that category because there's not enough data to work with. That's why you're getting all these weird like sectors that have the same long and short. So that's the best way to put it. And this is also important is because the only two countries you can actually do this type of scanning analysis from an automation point of view is really UK and US. I've tested all the countries throughout Europe because it's the same as exchange. You could treat the Eurozone as one country because it's the same exchange. It's a little extra processing. But the problem is with Europe and the Eurozone as trading tied back to the Euro currency, the selection of all those countries are really crap. Like there's not a lot to pick from that meet at least a billion market cap. They're all tiny companies. The only two countries that have that kind of really decent selection is both US and UK. UK is not bad. US obviously is the best because there's over 11,000 stocks. I'm also going to try this out on Canada as well because I can get the data from IQ Feed as well from the Canadian stocks. So I might do that as a test later on, but for now we're working with the States. So let's go to another important, let's say oil. Oil would be good because they've been doing pretty good. Okay, let's try one of these, oil and exploration. All right, so here we've got our short AR, our long of ARI, our AR short. Okay, let's put them in the charts here. So here's our, okay, so we reset this one. So now we've just got the blue AR, which is a short, and then we're going to use the long, which is ROC. Okay, so I'm going to say something in a minute about this. Okay, so if I do a compare, ROC, so this one didn't work out as well. And again, ROC is supposed to be the long, and this is the short. But here's where it's interesting. I don't think this would be a good time at this point to put on a trade at all. But here's the interesting thing. You can tell this may work because if my little script picked out the weakest one, which will be the short, here's the outlook. The beta, it's just barely outperforming the benchmark with a 108 beta. But with this one, this ain't doing too bad. The ROC is 1.8 beta. But here's where it's probably the only one that is got a decent EPS. That's not a really strong EPS, but for probably the sector, it's probably a better one. But the timing doesn't look good. But as an idea, look at that little rise right there. So you could probably tell that this, if oil continues doing well, this little guy, this ROC, could do really well in a few months. So again, I could put this on my watch list and have my system watch this pair as a potential trading opportunity for pair trading. Okay, so just be aware of that. Might not be good today, but maybe good in a month, 2 months as a pair. And again, my system's going to be consistently generating new pairs for this sector. But yet I have the control to keep this pair on my watch list as well, and then have another bunch of scripts running to check the opportunities for those pairs as these two play out in terms of price action. Okay, so let's randomly pick another one. I'm going to do 10 here. Okay, let's do a more conservative. Another important factor I'm not filtering out yet, and I may or may not do this, is that when you look at categories or market sectors, you got to remember that there's always going to be an up market or a down market. And that brings us to the cyclicals versus the defensives. When you have your down market, you can always pick off your categories that are really great for as a defensive. This one, as property casual insurance, is fantastic. Why do I say that? Because people always need insurance regardless. This is a very boring sector, but if you're in a recession and still wanting to play the markets, this still may be decent. You may not get as decent returns as you would typically get in a defensive, in a cyclical regime or a fast moving market like we are in today, where there's like amazing returns in the stock market. But if you're in the down market, this one may not be a bad defensive to play in a recession, right? So let's just check out what we got here. So again, I'm not going to get great results here, but we're looking at property casualty insurance, as boring as that may be. So we've got this ASAM. So this is our third test. So I'm going to enter this guy in, reset. See, I can tell this chart's not too good. This is a tiny company. I won't even bother because I don't like the looks of that chart. Again, we're just eyeballing this stuff. And again, my system would typically catch this, but it'll add it to the watch list. But my system most likely at some point may not add that pair as a potential trading opportunity. Let's see what else we have. Property management maybe, but these are going to be from really small companies, so they may not be big enough to really even be worthy of trading from an automation standpoint, at least. Okay, let's try out this guy, RMAX. I think this is this is Remax. Okay, so this is Remax. So that is our short. So this is now our long. So I'm going to add that to the compare. So that is CoStar Group. Again, not good. It's in reverse. So let's check out. See, the only reason that the system picked it, the beta in Hermax is pretty good. So this isn't really a good example, but maybe if I had chosen RMAX to be the long and this one, that may work out. But you're not going to get them all the time. But the funny thing is that the reason that my system probably picked this CSGP as a long is because of this EPS is pretty high. Now, if RMAX was confident with their outlook, they would say, "Hey, here's our EPS," and you would think that would have played out. But the script's dumb enough; it's not to logically figure that out, but it's just using numbers. So that's the reason why I think that my little script picked this out, because of this EPS, but there's no EPS here for RMAX, which means RMAX don't feel good about their outlook anyways. That's how I build around that. No company that doesn't give out their outlook through EPS is probably not a very confident company. But let's check out the residential REITs. Again, this is a defensive. Let's see what this drums up. CMO. So this is now, I think, our fifth test. I'm going to do 10. So CMO, reset. So, well, that's good. It's going down. That's a good thing. So maybe we might have some decent trade here. So we got this PREVS. We'll compare. So let's see. This company doesn't look like it's big enough to even trade. I mean, this is not a perfect time yet, but if I do a 1 day, let's see what the 1 day looks like. Where's my green? Okay. 1 day, let's do a 5-day chart. I don't see my green. If I do a 1 month, okay, so here is our guide down here somewhere. Okay, so let's just go back to the, try to do a 6 month, a year, I guess. Okay, so somewhere in here, this is not getting reported for some reason. Let me get rid of this chart here. Yeah, that's a weird chart. I don't know what's going on with this particular stock. This is the reason why I don't like playing in the stock markets, because of all those weird things you cannot explain. I mean, maybe this has been halted for some reason, or I don't know. Anyways, moving on to the next pair. But again, there's no way that this pair would get added as a potential trading position. I don't think my system would allow it once I start showing the next set of steps. But let's check, I don't know, hotel, motel. Let's see what this comes up with. Travel. Okay, so we have here AMP. Okay. I'm going to reset it all. Okay, so here we have a decent price line. So that's our short. CLDT. That no, didn't get added. Okay, CLDT. Doesn't look like I can add it. Let's see if I can do it in another browser here. I think there's a limit on how much stuff you can do on Yahoo Finance. So there is CLDT, but you can't see it. Let me do a yeah. So I'll go back. I don't know. See if that can apply. Does it change anything? No. Guess visually you can't see it. Again, just these combinations can be awful. Let's choose another one. I don't have patience for this. This is one of the big reasons why I'm not a big fan of stocks. Just all this weird crap that you sometimes can't control. Let's do a diversified REIT, see what this comes up with. A lot of these companies, like playing in the micro, it's not worth it. Just the weird things you see, like as I'm showing you. Okay, so I'm reset. So here's our REIT for NNN. See what this comes up with. Mortgage. MGTA. Okay, do a compare. Okay, this could kind of maybe work. You can see that in green, both are getting hammered. And again, they're only getting hammered because they're defensives in an up market. But if this was the opposite condition of a down market, these guys would probably do pretty good. But you can see the long is sort of outperforming somewhat. We knew that this would not be a great combination. But you can see here again, the beta on this one sucks. The beta on this one's good, but this one's the only one that's showing EPS. So in a way, because it's recently been kind of sort of outperforming, this MGTE in green is outperforming. I would think it's giving guidance. So others are seeing the same logic and trading based around that. Because if this company was confident, they would offer their guidance too, but they're not. So they get hammered on their excuse me, on their stock performance. So there's nuances here that I'm just guessing at, but that's why we're doing this. So let's check out a potential decent, well, I won't say decent. Let's try out a retail sporting activity. All right. So here again, we have that same problem. Not enough. The selection in this is really bad. So it just picks what it's available. Probably one stock, a long and a short. So you can't blame the stock selection in these are really bad. These categories. Again, same thing. So let me get out of these specialty, whatever, and a better waste management. Yeah, let's try a waste management one. Again, it sucks. WCN. Now I could change the categories by changing in my code, merging this category with that category, and then pick from all of those stocks in both their 3 or 4 categories. I can do that are related to each other. Let's try the wireless. There might be something decent in that. So we have UTSI. Okay, that looks good. Now I've seen this before where, oh, this is it in blue. So UTSI is our short in blue. So in green will be our long, VIP. Compare. Again, we have another stock that's just, it's crap. It's just not. There we go. Wow, look at that. A 5-day chart. Wow. So if you were to put that little trade on Monday, November 28th, and my system saw that, that is just taking off that little guy. And maybe this works. This would have been a good one if you were to pick that. Wow, that's quite some nice performance there. That must be a new one, VIP. All right, so let's say this is my 6th test of a valid search. So now we're looking at some trucking. Again, this is if on a good economy, truckers should be doing very well. So first, let's put this back to, let's say, a 3-month. So this hasn't been doing too well. Had a little bit of an uptick. Okay, so now we're going to compare it to the long. Okay, so we're going to do a comparison now. So here, our red is the long. Our Y. So let me get rid of this guy. We don't want the VIP. That's from the previous. So yeah, so this would have been an actually good one as well, potentially, because the YRCW is the long. And then our PATI, I think it's Pattison, is not doing too good. So let's do, that's a 3-month chart. So let's do a 5-day chart. This is the weird charting. I can't explain this charting, the pricing of this, but that's a 5-day, 1 month. There we go. Okay, so the long is still outperforming the short. All right, so that's a good one, or can be. Theoretically, it works. All right, so let's continue playing along. All right, so let's. That would be number 7, let's say. I'm gonna try gold. Gold will be an interesting one to show. All right, so gold, the short will be this NG. All right, so let me reset that. So here we are, blue is NG, that's our short. So now we want our long, DRD. Compare. Wow, so here, again, there was another opportunity. If we had this back in December, dumped it here or anywhere along here, we could have done a nice, wow, a nice 50% move on that spread. Wow, wow, wow. That's not bad. Doing this day in and day out, folks, with these kind of returns on these kind of positions, you'd be doing all right. If we could tighten up the selection process and the risk. Okay, so we'll leave that. That was number 7. So that was gold. Let's randomly pick internets per jewelry stores. We know that those are going to suck. Manufactured housing. This might be an interesting one for residential. Because we knew housing was doing pretty good. That was a dead. Oh, see, there you go. Selection sucks again. Oil and gas, pipeline. Why don't we do both the? I think we did this before. I don't know. I'm having too much fun at this. I could do this all day, all week. Okay, so we have a. Yeah, we looked at that. I need to look at any more oil then. Let's see, resorts and casinos. Why don't we look at those? Traveling in an up market, people will definitely do that. So we're going to use aisle as our short. Just like that. Okay, so that's blue is our short, and UWN is our long. We'll compare. So it looks like something happened here. I can probably guarantee you I know what the problem is. Yep, it's the same, man. It's this one gives the EPS, this one does not. The short does not give the EPS. And the beta, I could probably change this around where if, like when I do a sort or a comparison, they both have to have EPSs, or I don't know. It's a combination of tweaking things to make them better, but this definitely didn't work out. But you can see why this was a long, because it gave EPS. So this again, it's a dumb script, so it thinks that's the long. But if I just use EPS, or sorry, beta alone, you clearly would know that the aisle is the better performing versus the UWN. So it's just a matter of adjusting it. But when it works really well, like in the previous example. 50% return, I'll take that. Yeah, let's check out some banks. Or how about railroad? Yeah, we did railroad. Pollution treatment. Something tells me that the selection in this one's going to blow. Actually, no. But look at this. They're getting hit. Negative beta, I wouldn't even bother looking at those. Money Central, major. I want to do some airlines. Travel, that's good. Okay, so we have a short on save, whatever that may be. Reset. Ooh, nice performance on the short. See how our long did. But again, you can see, again, it's like another example where the beta, this one is definitely outperforming on the save, but because this one lists the EPS, this is where the system thinks the long, because it's got the EPS. So let's compare here. No, it didn't work out. So again, I gotta tweak this, but you can clearly see if I did the reverse. Wow, that spread right there. If I put that trade on here, did the reverse September 28th, that divergence is pretty nice, about 30%. If I did that, wow. All right, let's continue along. Let's do two more. Lodging, hotels. I think I tested this last night. This may work actually. But it's quite interesting. I already see some adjustments I need to make to this thing. Reset. Okay. So what's our long? And Hyatt. So it seems to be working. Actually, this is definitely working out. Let's do a 5-day chart. Yeah, bingo. If you put your money on that, that would have been just damn yesterday. Oh man, if the system saw that trade right there, that's just in 24 hours. right there. That's whenever that happened, that moved -4. That was a 20% move right there. Nice. So that worked out kind of nice. And you know why? You know how it works out? Check it out right here. This is a classic example of why this should work. If you have companies that list both the beta, both the EPS, everything works out. Good industry, but this N is unfortunately the weak one, but the Hyatt is just doing really well. EXPE, that is. Okay, let's do one last trade. But you can see the various examples. Let's do an info one. Info technology services. Okay, so this is the internet ones. So we have here RDWR. So that's the short. That's been kind of flatlining. So this is a year chart. So now we're going to add in our the IT long. Let's see where this takes us. Wow. Okay. So here's another good one. Right here, that would have been about a year ago. If we held on for 6 months, let's say here or here, no, here, the move would have been 35%. I'm going to estimate a low 40% move on that spread in 5 months on that one position. Those are big. I mean, those are big moves. Let's just do one more. Again, industrial metal. Let's do this industrial equipment. If I could tighten up this script on this, yep, see B, not good. That category is no good. How about we do investment brokerage? These guys should be interesting. Okay, so we have GCAP, which is a short. Okay, reset. So there's our blue. AMTD. That's our long. This is our last comparison. AMTB. TD Ameritrade. Wow, nice. Beautiful. That would have been awesome. So here, back in August, just right here, something happened where this puppy got pounded. 44%. That spread. That would have been about a 45% return on that trade right there. So you can see the potential of it. It can definitely work, this pair trading. Once I tighten up everything, these are the reasons why it's really imperative that you watch this stuff. Because if you got a financial advisor and he's telling you that you could get a 5 or 10% return, you should fire the guy's ass and watch this stuff, because with these kind of returns I'm showing you 25, this one 45% return in a matter of August till about November. So that's over 4 months. So you could have had a nice 40% run or return on this one little trade. And we've gone through at least 10. Some don't work out, but again, I just tightened up the scripts and the parameters and all that to prevent those false starts or those false positives. Okay, so hopefully you've enjoyed this. I know it's a lengthy one, but I just wanted to show you the benefit of the stock selection of this particular little package that you'll be able to retrieve on your own through this analytics service. Over and out.